you got to get different sources of income. And
Right.
This is just one piece of our portfolio. And I was like, well, what is the biggest piece? And they're like, real estate. We own 500 single family homes. I'm like, what?
Move over, baby boomers. It's time for Gen XYZ. It's time to stop waiting on the world to change. It's time to be the change. It's time to stop thinking about how your life can be better. It's time to start taking action, massive action to improve your life. Join Zach Winter and Markadair Rios every week as we learn how others had the grit, determination, and conviction to 10x their lives, and as we explore ways that can help you 10x your life.
Hello, and welcome to another episode of 10x for Gen XYZ. I'm Markadair Rios.
And I'm Zach Winter.
And today we are very happy to have a fantastic guest, Mr. Logan Freeman. He is a real estate investor. He's a syndicator. He's got an amazing background that we've invited him on to talk about. He's out of Kansas City. We've known him for a while, and we think he's a superstar. So we're really excited to get talking to him today. Welcome, Logan. How you doing?
Man, I'm doing great. I'm really excited about this interview. I've really enjoyed getting to know both of you guys, meeting here in Kansas City and along the path of the past few years. So just excited to be here and add some value.
Yeah, I love it.
Awesome.
I love it. Yeah, we just to kind of start us off as a little background, we actually came into contact with each other a few years ago. I believe that we were part of the same kind of broad, I think it was called the Phoebe Network, right?
Yeah.
Meetup group. And you were starting a Phoebe meetup group out in Kansas City. Is that right?
That's exactly right. Yeah. Whenever I was trying to get the name out there and really try to get the brand, I started to look into groups that I thought would be beneficial. This is, right before COVID. So I think we had 6 or 8 months, and then COVID kind of, killed our Phoebe group. But yeah, that's exactly how we got connected at the beginning there.
Yeah, totally. And so what I'd love to do is just talk a little bit about, you kind of starting out, and let's just hear a little bit of your story of maybe where did you go to college? How did all of that, how did you kind of orient your mind towards business? Was it early on, or was it after college? Like what was working for you?
Yeah, well, I grew up in the capital of Missouri, and not a lot of people know what that is. So I'll fill everybody in. It's Jefferson City. And I've said this many times, but I really do think that Jefferson City is kind of described as a fixed mindset place. So Carol Dweck in her book, Mindset, kind of went through the growth in the fixed mindset. It's a great place to live. It really is a great place to grow up and raise a family. But, a lot of the mentality there is, hey, this is kind of how it's always been, and this is how it's going to be. And I just always really did not fit into that mold. I think it was from my dad early on. Many faults, which we'll get into, and Mark, I know you know about, but my dad was phenomenal in a lot of ways. And he came from a 1-bedroom house on a tobacco farm with 13 brothers and sisters, full Native American from North Carolina. And so he had a different perspective on life, but he always told me that I could be and do whatever I wanted to, as long as I would set my mind to it. And early on, I had no idea what that meant, right? I just, I kind of poured that into athletics, and I said, okay, well, let me see if I could be a good athlete. And so growing up, I identified as an athlete, really found kind of refuge in sports and athletics and competition. And, my mom worked 2 jobs to put us through private Catholic schools. And I'm always grateful for her to sacrifice what she did to do that. But what I learned early on, too, was the value of a dollar. And being lower middle class, when I was 14 years old, I said, well, I'm old enough to start working. Where can I get a job? Well, it turns out a lot of people don't want to hire 14-year-olds. And so I started baling hay in fields in Missouri, in mid-Missouri, and I got a job washing dishes at a catering business. And the only finance that I had kind of exposed to me was through personal finance at my high school, and that was Dave Ramsey. And so what did I do? Well, I went and started a Roth IRA when I was 14 and a half years old. I said, if I start now, I'm going to be rich by 30, right? Well, I'm 30 now, and I can tell you that that's not the case. So, I had a good career in high school and football, and got an athletic scholarship to play football at the University of Central Missouri, and really excelled there in athletics and in academics, and started to get some looks from scouts. And so, as a Division II athlete, you typically get redshirted. So that means you practice the first year and you come back for a fifth year. Well, I actually played my freshman year, but I broke an ankle and tore an MCL. And so I got a medical redshirt, which allowed me to come back that fifth year and really prosper. And so at the end of that career there, I was picked up as an undrafted free agent with the Oakland Raiders. And I was out there for football camp, training camp, and made a few cuts, but ultimately got sent home. And this was kind of the first big turning point in my life. It was this huge weight that had been lifted off my shoulder. I really felt like my whole life I kind of pigeonholed myself as an athlete, and I wanted to kind of break out of that. So whenever I was cut, I made a decision. My agent said, hey, just stick it out. The 49ers called a week later and I said, look, I'm done. I'm just done with football. So I went back to school and finished my master's degree. It took me about 6 months to finish this master's degree. And this is where my whole life changed. So at the NFL Combine, 335 pounds. In less than 6 months after I was cut, I was 219 pounds. Wow. So I had lost close to 110 or 115 pounds. And that was one big physical transformation. But really what happened was this. I had to get a job because one, I had no business experience. Two, I had to pay for rent in my cockroach infested apartment in Warrensburg, Missouri, because I had no scholarship. I had no money. Undrafted free agents don't make money unless you sign a big contract, which I did not. And so I would drive an hour to a job, make 265 cold calls a day, and I get told no 264 times. I get back in my car and drive an hour back home and go to school for 4 hours in the evening. And then I would also, spend 12 hours in the library every single Saturday just catching up. And what I did was monumental. I turned my car to the classroom on wheels. I started listening to Brian Tracy and Zig Ziglar and Jim Rohn and Tony Robbins and Lewis Howes and John Lee Dumas and Robert Kiyosaki and all of these folks. And that's really where my mind started to shift. Look, I'm going through this formal education as going through a master's program, getting all these theories thrown at me, and I still don't know what business is. And then I'm listening to these CDs because if you guys don't know, there was CDs back in the day where you actually had to buy CDs. Podcasts were hardly even around then. I put a CD in my car and I drive, and I started listening to this stuff, and my mind was just blown. Like, this is the way that the world actually works, and this is how value is created. This is what you get paid for, and it just lit a fire underneath me that was just monumental in my life. And so graduated with my master's, got a different job as a franchise consultant with Jimmy John. So I'm getting ready to move out of that cockroach infested apartment. My dad shows up to help me move out because I needed a truck. He had a truck at the time. And like I said, my dad was 6'3", 250 pounds, dunk a basketball, hit a golf ball 300 yards, and he couldn't walk up the stairs. And so I knew something was going on. And less than 3 weeks later from that date, my dad passed away with complications of liver cirrhosis and, all these different medical things that kind of popped up. So as you can imagine, no longer a collegiate athlete, no longer an NFL athlete, went through this big physical and mental transformation. Then I lost my dad. So there was a turning point there. Was like, okay, some mentors in my life said, all right, man, I'm going to take you under my wing and you're going to be my quasi son, my prodigal son, that I never had necessarily. And even though they had sons, they took me under their wings, which was pretty amazing, and said, look, you've got two paths to take right now. You can take the same one your dad did. No bad feelings towards your dad, but like decisions have results, and those are the results that path will lead you to, or you can go the other way. And I said, well, what's the other way? And they said, well, what's the most important things in your life? And I'm going to give you the first three. It's your faith, it's your family, and it's your fitness. And then you can pick the fourth one. It can be fun. It can be future. It can be food. It can be whatever. I'll say there's another F word. I won't say that one, but I did do that quite a bit as well. And I was out there exploring, and so I figured out that for me, it was really important to be focused on my future. And I have this kind of innate ability to say, okay, I know where I came from. I watched my mom struggle with those 3 kids, always going to garage sales and eating the great value brands. And I don't want to do that. And I have a chance right now to have a Freeman name that can be compounded into something much greater. And so then we start talking about legacy. What are you talking about legacy? I don't even know what that means. And so these mentors are sitting there pouring into me. They say, you got to read this book and that book, listen to this guy and that guy, but then you got to go apply these things. So I'm going to check in with you every single week and say, okay, give me 3 things you're going to do this week. I'm going to come back and I'm going to say, okay, did you do them or not? And so then accountability started in my life. And so for me, being a coachable guy, this was incredible for me. And that's what really kind of brought me to this level of thinking about the world differently, acting a little bit differently, pushing back against social norms and mediocrity and saying, okay, I'm going to set a path, or at least try to set a path in my life that gives me the opportunity to live a life that maybe I wasn't privy to previously. And that's kind of where my journey started. And now obviously transition in real estate. We could talk about that too, but I'm sure I'll just pause because I talked about that for about 10 or 15 minutes there.
Oh, that's beautiful. I actually had the thought, just kind of early on, it sounded like when you were in football camp, you had moved into your free agent status. Had you already kind of had the feeling that this wasn't for you while you were kind of going through the motions at that time? Or was it like, what was your, just kind of what space were you in before you actually made that decision and kind of made that turn?
More than the love of winning, I hate to lose. And I knew I was going to lose. The speed of the game, the size of those people, everything. I had a target on my back, small school, all of these things. I moved positions, never played it. So I just knew it was inevitable. I was going to get sent home. Right. So for me, it was like, okay, I think that this chapter is ending. So what am I going to do afterwards? Well, my goal after I beat out a couple guys they actually drafted was to say, well, maybe I can make a practice squad, and put $450K in my pocket for a couple seasons and then go invest that in real estate and start, being my own man in real estate. And so I had an inclination, I had an idea. And I still remember kind of going down to the Lake of the Ozarks. I have a place down there for years. And I drive around in my little pontoon boat and just look at those houses. And I'm like, you know what, man, like not everybody inherited that. Somebody built something to be able to do that right there. And I would drive that little pontoon boat with a 35 horsepower motor around the lake, just watching and just looking at all of those houses. And a lot of them were empty. I mean, they're just not empty, but nobody was ever there, it seemed like. But at the end of the day, they had that, right? I mean, they had the ability to do that. And I said, well, what makes them any different than, little Logan Freeman from Jefferson City? I don't think anything. It's just decisions that they made. So I had that kind of feeling and thought process when I was going through camp and was already kind of thinking about the next move.
Yeah.
Hey, Logan, you mentioned that you are a franchise consultant for Jimmy John's. A lot of our listeners are interested in getting into business, and I'm sure a lot of them consider franchises. I'd love to get your take on franchise ownership and what your experience was with that, and ultimately why you chose to veer towards real estate as a path instead of franchise owner.
Well, I feel like I'm a story guy, but I got a story for everything. So I'm going to tell you another story because as the youngest franchise consultant that Jimmy John's ever hired, I was loving it because it was competitive. I was working in the stores. I could positively affect change, all these things. Well, they would rank all these consultants, right? So we had 88 in the company at the time. I'm sure they have 880 now. I don't know. But at the time they had 88. And I was top 5 for 6 months in a row. And I was like, man, what is the next move here for me? Well, it was to be a regional director. I watched that guy and he worked, not even less than 15, 16 hours a day. And he was on call all the time. I'm like, I don't want to do that. And so I went to him and I said, look, hey, I'm really curious, like, what is the next move for me? And he was like, well, you're the youngest guy, you got to put your time in. And I said, well, here's my 2 weeks. And the reason for that was this. So I'd be able to actually meet all of these owners of the franchisees. So all these franchisees, because in the Jimmy John's model, the owner has to work in the store at some point. And I'm sure they've made some, decommitments to that at some point. But at the time, an owner had to be in the store. So I would hear them talking about, real estate and other businesses that they owned and, how they had to be in the store that day. You could tell they had the Jimmy John's hat and shirt on, but they didn't know what the heck they were doing. It's like, what the heck are they doing here? But at the end of the day, what really interested me was all of the other businesses that I saw these guys owning. And I said, so you own real estate, you own this business, you own this franchise, what else? I mean, why? And they said, well, you got to get different sources of income. And This is just one piece of our portfolio. And I was like, well, what is the biggest piece? And they're like, real estate. We own 500 single family homes. I'm like, what? So that light went off for me. It was like looking at the franchise business as just another kind of piece to their portfolio was really interesting. What I didn't love about the franchise model was this. It's a people business and it's a service-based business. The hardest thing in any restaurant franchise is labor. And being able to do that, because as an owner, you can't be in that restaurant 24/7. You don't want to be necessarily. And so what was really great about the franchise business was here's a blueprint. Here's a blueprint with every single thing from the distance from the outlets that need to be in this building. Like that's how detailed it was. I mean, here's how much mayo goes on a sandwich. Here's how many tomatoes. I mean, everything was laid out. Right. And it's been successful, obviously. So I loved that part of it. I really thought I was going to be a franchise owner until I started to actually interact with a lot of these franchise owners and say, hey, what else are you doing? And almost every single one of them said real estate. And I was like, okay, that's a really interesting theme. And I had already been interested in real estate. And so it just kind of married those two together.
Do you implement traction in your guys' company?
We do.
The EOS model. And so you just brought up something that's very interesting because the franchise model to me really kind of seems like systems are taken to the nth degree if they do it right. Just like you said, right? Making sure the pickle is positioned perfectly. And you see, they always have these diagrams on how to put together the sandwiches and things like that. What's your take on kind of implementing systems in your guys' company? Are you really at that level of detail, or do you leave a little bit of kind of flexibility, creativity, kind of, universe comes in and let some things get done? Or are you really kind of like SOP everything and let's, push it down to everybody, including us, at the executive level? How does that work for you guys?
Yeah, we'll try to be open to everything and attached to nothing. So don't ever want to suppress anybody's creativity. But at the same time, without SOPs, people are not successful. There's 3 levels of delegation that you have to realize. Your employees are all on a different level of this spectrum. There's directive, there's objective, and then there's leadership. So directive, tell them exactly what to do, when to do it. Objective, give them the result that you're looking for and tell them to go get it done. Leadership, hey, I need this. I don't care what you do to get it done, whatever process you need to get to. We'd love for everybody to be in the leadership space, right? But that's just not how business works. There are things that have been proven out to be successful that have standard operating procedures that make sense to have those around there. Prime example, this week, again, I was telling Zach this before we started. We launched a retail portfolio project, right? So 2 retail shopping centers and had major success with it. But in our investor portal, I don't have an SOP for my investor relations guy to go in and say, okay, this is how this offering should look in the portal. And so I told him to build it. It was blank. I kept telling him to build it. Never got it done. So what did it do? Well, it took me 5 minutes to get it done, and it looks amazing. But I don't have that SOP for him to actually go in there and get that knocked out. So things like that, extremely important, because I've already tested different ways to do it. It's only in my brain though. So as a growing business, we have had to really step back and say, we're going to have to spend 150% more time up front right now to document these processes in a way that allow other people to be successful in this role. But it also is going to give us 225% on the back end. So we are pretty heavily focused on this. On the SOP side, only from now having 24 employees, you have to, because it's not just 3 principals running around, being able to do everything all the time.
But are you guys attacking that where you just like, let's just get something down, get it out of our heads and onto the paper or whatever it is, into a Loom video or whatever, and then we'll fine tune it as we go? Or are you fine tuning it within yourself before you kind of pass that down? Do you go through a couple different revisions on that?
Yeah, absolutely. I mean, I think that it's similar to reading a book, right? I mean, you read a book, you hear about Steven Schwarzman's failures, Sam Zell's failures. You try not to do the same thing.
Mhm.
Many of the tasks that are being delegated, we have already done or failed at ourselves. So,
Mhm.
yes, the SOP has been revised in our own mind. We think we have the best version of it, but each year going back and revisiting that is extremely important because things change, technology changes, new technology comes out that we can utilize. So organic documents for sure, but at least the blueprint is there and allows people to try to be successful in that role.
And then I was kind of just relating it to, because you said, I jumped into the portal myself and did it in 5 minutes. Was
Mhm.
he sitting over your shoulder and you guys were documenting it as you did that? Or how did that play out? Because that happens a lot, right? These little 5-10 minute tasks that seem so easy, you end up doing them and then you go, oh man, I have to go back and kind of write down what I did so the next guy can do it. So how did that work out just in that particular instance?
No, I failed. I did it myself because I wanted it done, and I'm a control freak. And so that is something that I have to work on. And I should have brought him into this office right here
Okay.
and gone through that with him to show.
Yeah.
Now, what I'm going to do now that I've gone through this and you've given me some coaching live here, which is amazing, and I appreciate it, is this. I'm going to take screenshots of that and exactly where to find the information and how it should look. And I'll have it done for the next time. But yeah, if he was sitting here doing that, being able to look at over my shoulder and what I was doing, how I was formatting it, all those things, it would already probably be done, but he wouldn't have documented anyway. So as a business owner, it's my job to do that, but I probably should have coached him through that for sure.
Yeah, totally. No, that's all good, man. It's all good. I love hearing about that stuff just because, both Zach and I, we do the majority of the stuff ourselves, and we each have our own things that we do, and we have yet to really implement all the things that we go through day by day and kind of put it down. It's extremely important too.
It's important, and it takes a certain amount of commitment because you get wrapped up in the thing that you're doing. And, the days just get so busy. So to then say, okay, well, I'm also going to have to carve out time to create a system and procedure and write it all out.
Mm-hmm.
It's very important, but it's like, that quadrant, like very important, but you don't have to do it now, or very important, you have to do it now, or not very important, but you have to do it now, or not. It's in that quadrant where like estate planning is, right? It's really important, but I can put it off today.
Yeah, that's the Eisenhower matrix, 100%. And, I think that prioritization is extremely important. And as a leader now of 5 or 6 direct reports, I have to work on prioritizing not just my time, but theirs as well. So we utilize something called the power list, which is from Andy Frisella. And, you come in to the office and you got 1,000 tasks to do. Yeah. Okay. Understood. But a lot of those tasks are subtasks from other things that can be done. And if you get one of those done, all of the other ones actually fall off, or they get done while you're doing the first one. So my job as a leader now is to get every single one of my direct reports power list every morning and then change that and say, actually, that's something that is a Q3 rock, not a Q2 rock. And so you don't need to be focused on that. Let's put this up here and change this around. And that port, it takes, my time about 15 to 30 minutes every single day. But I can guarantee you my team has direction, clarity, and they know what they should be focused on, which creates, optimism and a lot more productivity. So just little tools like that have been really beneficial for us.
Yeah, I love it. I love
Totally agree. Yeah, there's lots of different systems out there, different ways to create lists and prioritize your day and focus. But I think the key is find something that works for you and really stick to it.
Yeah, 100%. So, Mark, we kind of stopped my story when I moved to Kansas City. I'll just continue to kind of give you guys an outline of where I kind of came from there, right?
Totally.
So, was franchise consultant, like I mentioned, gave my 2 weeks and went off and went to a startup company with 3 employees and just started hitting the phones again, completely different industry, transportation, was selling a startup product for large trucking, over the road trucking companies like Swift and Warner and JB Hunt, and learned a lot and, had a lot of growth as a professional person there and didn't really do much real estate at that time. I left there we were a little early and technology wasn't where it needed to be. Landed some big pilot programs that didn't pan out. So I left to what I thought was a safe job, 6-figure sales job here in Kansas City. I don't know, 26 years old, 27 years old, just getting ready to get married and all these things, or I had just been married. So I was trying to be more safe and comfortable. 15 months in, I was fired. And I found out that I was, unemployable. And my wife goes, look, dude, you don't need to go get another job. You need to go do something yourself and take all of that, knowledge from the 750 books you've read over the last 6 years and go apply it. And I said, whoo, that's awesome. So I did. And I started my own sales consulting company. I grabbed the Inc.'s 5,000 fastest growing company. I called 2,500 of them and landed 3 full-time jobs. With these clients. And I was doing cold calls. I was going to their conferences. I was setting up CRM systems. I was training their salespeople on Franklin Covey, all these different things. But at the same time, I took a head of acquisitions position for a $50 million fund here in Kansas City. So I was doing both of these things full time, doing 10 transactions a month on the single family home side. So their whole model was to buy, renovate, rent out, and refinance. And, I was very successful finding those deals for those guys. And they ended up with 265 homes, 150 of which I think I was participating in. And, we did a big CoreVest portfolio refinance across that whole portfolio. Returned about 88% of the capital to the investors, and it's still cash flow. Now that's amazing, right? I mean, that's pretty awesome. And they're probably sitting on a gold mine right now with the shortage of single family homes in and around Kansas City. So one thing I learned through that though, is I didn't like the consulting business. So I dissolved that 6 months in and really focused on real estate and sat down with those sponsors. And I said, guys, you just got to tell me how this capital was structured. Like, where'd the money come from? Because I was just a vendor, I was just working in the business. And they just said, well, we syndicated the equity. And I just didn't know what that meant. So went on a big learning lesson myself, an educational journey, brought my idea back to the broker I was working with at the time. And he's like, no, that's not what I do. And I'm not going to do that. You're going to get crushed. I said, okay, see you later. Here's my 1 day notice. And I left and started brokering commercial multifamily properties here in Kansas City. Wanted to get some more of that experience under my belt. Did that for a year or so. Started buying some properties myself and, ran out of knowledge, experience, and money. And so that was the time where I thought it was really, really the right time to figure out this syndication business. But I needed partners because I took stock of what my strengths were. And I knew that I was not really strong on operations and accounting and finance and all of these different things. I really focused on acquisitions, investor relations, and marketing and relationships. And so I found some business partners back in 2019. We started to purchase some multifamily properties here in Kansas City, had a big thesis on neighborhood centers, neighborhood retail centers going into COVID. Obviously, COVID happened and we dropped all those contracts. We repivoted into multifamily. And I know you guys track this, but as Green Street's property price index was falling and going down, we were buying, and we bought 1,000 units in that period of time. And so now the trajectory for that has been a hockey stick growth on the upward trend. And now we're flattening out a little bit, but we've added another 300, 400 multifamily units, but now repivoting back into neighborhood retail and suburban office buildings. And so still very bullish on multifamily. Still, we're buying a 70 unit deal right now. We'll continue to do that, but it's very difficult to do. And so we had this big growth as a company, and we had to step back and say, okay, we got to start getting the right talent in here in this business. So the last 15, 16 months has been us hiring the right people. So now I think we've got 23, 24 employees across the business now, and looking to continue to scale and do the right things and be prudent investors out there. But been much more of a transition this year for me from a solopreneur and kind of a solo producer and just kind of out there rainmaking to business ownership, leadership, and putting these practices in place that allow us to be successful over time.
Sure. And now with your employees, are they kind of siloed off from all of the stuff that you guys are doing, say on the syndication side, the capital raising side, or is it all hands on deck when you guys, I know you had a deal that just came up. You have 2 deals that I think just came up, right? That you were raising on. Is it everybody kind of helping out with that raise, or do you have some of your employees are just working on certain things, even though the raise is happening? How does that work with you guys?
Yeah, Well, we have one other gentleman, myself, and one other guy on the investor relations team. Marketing is heavily involved in that as well. Obviously, we have one person on the marketing side too. But we have, different pieces of our business. So you have acquisitions where we have acquisitions and an analyst. Then we have, due diligence. Our operations team handles the due diligence as well as our asset management. And then we have finance and accounting. We have two folks in that space as well. We have a couple of executive assistants that help us out. We have a chief of staff. I think that everybody kind of has their input on a capital raise, but it's heavily focused on marketing and investor relations, but not until acquisitions and investment committee has already gotten through the project and we've kind of given it the blessing. So yeah, everybody is definitely involved, but whenever we launch a new deal, it's heavily focused on myself and my investor relations associate.
Yeah. And so right now at this point in time, what I love, man, is that, we talked about that. You guys have the ability to kind of go horizontal in terms of, because you have a broader base of knowledge. And this is what Zach and I kind of enjoy as well, in my opinion. You can kind of spread out into other asset classes and not just be one trick pony, say on the multifamily side, or just doing self-storage or whatever. Having that knowledge, and your partners have backgrounds. I think have some institutional backgrounds as well, right?
Right. Yeah.
And so it's great because there's some flexibility there. When things kind of change in the market, you can kind of look in different directions, but still maintain the underlying, hey, we're in real estate. We're just looking for a yield over here, or we're looking at this asset class, but it's all cash flowing real estate. It's all commercial real estate.
Yeah, I would say that we kind of take the same approach of Sam Zell, professional opportunist. And when he's looking at different opportunities, it's because he sees trends that are happening, right? And so I think we're very similar in that. I've been involved in single family homes and retail. Parker's been involved in retail and office, Corey in multifamily a lot as well. So I think that, just trying to bring that knowledge base in and then educate investors, along that path. And then you also have to have the business structure to be able to do that. What it takes to manage this 50 unit deal that I own right outside this window versus the 40,000 square foot office building that I'm sitting in right now is two different things, it's a completely different part. So you have to have that knowledge and experience and then be able to actually manage these things effectively. So I think it's important, but also, like I said, like you said, in the multifamily space, if you are an acquisitions business and a syndication business and you have capital ready to go, it's very difficult to not go buy a deal in a space that's overheated because you're trying to keep the lights on and or trying to do your next opportunity. So you never want kind of your capital making you force you into a deal that you don't need to do. And so I think it's really important to be able to be flexible, understand different trends, macroeconomic, trends, and then make decisions based off of that. So that's what we try to do.
Yeah. And if you're looking out, into kind of the horizon, I guess I'll call it, like, what's difficult for you guys right now? Like, where do you just see kind of a little chink that you guys are really working hard to? Is it, raising capital, finding deals? Like what's happening with you guys right now?
Well, as a growing business, I would say it's more along the lines of making sure all the different parts of the business are communicating and working well together. Because one thing that we've learned is, when we do a new project, investor relations needs to know what's going on with the due diligence so they can actually communicate to investors and timelines and different things like that. So really trying to open up the communication across acquisitions, finance, investor relations, marketing, and operations, and break down any barriers. So that's been the biggest, I think, challenge, because previously it was just the three of us doing these projects. And so now it's not. And, Danny, our director of operations, doesn't necessarily talk to me all that much about, how capital raises are going. And I need to know, what's going on in the due diligence process so I can effectively communicate those things. So I think that's the biggest part, is just making sure that we have ways, tools, and structure to actually communicate on a regular basis and prioritize across that as well. Because we have 1,300 multifamily units that we're operating on a regular basis too, and doing new projects. So I think that's really important, because investor reports come up and all All of these things need to be taken care of. And so I think it's just the communication piece and making sure that people know exactly the chain of command and that they can lead up the chain of command and down the chain of command and how and when to go find and where to find the information that they need to be successful. That's what we're trying to break those barriers down right now.
And do you guys have a property management arm too? Do you guys manage your multifamily properties?
Yeah, we manage about 600 of our units here in
Mhm.
Kansas City. We do work with one property management company, AFI, Alexander Forest Investments, that have proven to be a really great manager up to this point. So they manage our asset in Iowa and Nebraska, and they'll be doing the one in Columbia, Missouri that we're purchasing as well. But here in Kansas City, we're managing most of our stuff.
And then you guys also manage your retail stuff as well yourselves?
We manage our office building here. The retail shopping centers that we're purchasing have great legacy management. Kessinger Hunter does a phenomenal job. I mean, at the end of the day, that really comes down to CamRex and really understanding just collecting those rents. So we're going to basically what we're going to do is keep those guys on, not disrupt the great flow right now. And when the right time is, and when we find some good commercial property managers to come over, I think we'll start that arm up as well.
Yeah, part of that is leasing, right? Is
100%.
Is knowing, just really having a really great leasing agent for those vacancies, especially in this environment.
Extremely important. Yeah,
super important for retail. Yeah,
totally. Yeah, that's something we've been really looking into. Is it's surprising how strong retail has kind of come on when people were kind of sending their the death warrants to retail over the last couple of years.
Absolutely.
And now it's kind of
everything's cyclical. It's so interesting, isn't it? I mean, 2 years ago, everyone thought retail was dead, zombie malls, and now the great fear is office. There's a lot of fear about people not returning to office, but I think it's just cyclical. I don't know if you guys saw. I was mentioning to Logan the article that came out yesterday about Elon Musk ordering all of his office workers back to work 40 hours a week back into the office. So there's indications that it's coming back.
Absolutely, guys. I mean, in regards to retail, I think not all retail is created equally, and there's a lot of sub niches inside of that. So just like a multifamily deal, you've got Class A and great areas. There's also Class D and not very good areas. And so, and inside of that, you have garden style and high rise and all that. So I think what happens a lot of times is people just hear retail and they think maybe big box or retail, and they forget that, hey, I'm actually stopping at a shopping center on my way home to pick up the gallon of milk for the kids right before I go home, So I think it's, you just got to be open to different, opportunities. And what I mean by that is understanding that inside of each one of these asset classes, there's niches that have performed well. And right now we have 26 months of data to see, during a global pandemic and a lockdown, how they performed. And what has happened in a lot of cases is the weak businesses were weeded out, and property owners are now being even more stringent on the tenants that were putting into their shopping centers, because they don't want them to fail, because it's not necessarily good for business. And so a lot of those weak businesses were weeded out. A lot of the e-commerce resistant kind of service oriented businesses stayed in and have performed well because they were actually essential businesses during the lockdown. And so just like any other type of real estate, it's hyper local and it's hyper focused, and there's opportunities in there if you're willing to kind of look past the headlines.
Right.
Yeah, that's absolutely right. The media does have a tendency to just say all retail or all office. But, Mark and I took a real deep dive into office a few months ago, and we're able to pick it apart and identify types of offices and submarkets that are actually doing quite well, whereas others are still struggling.
Absolutely.
And part of that also is this whole work from home thing. I believe it's going to come down to industry by industry or company type by company type. So we identified that call centers, those big floor plate call centers, they're done, because you got software, you got a VoIP phone, send people home with a headset with those three things, and you have your call center with a bunch of people. So yeah, you're not going to need those big, pieces of real estate, but there's some industries that you just need people to come into the office at least sometime, in my opinion, right? Do they need to be coders? who sit in front of the computer all day and, and they're coding? Do they need to be interacting and doing all the stuff that they were doing before? Maybe not. I don't know.
But there are an awful lot of businesses where it's really vital to be in the same room, collaborate, connect. You just can't get that through these nonstop Zoom meetings throughout the day.
Totally.
Absolutely agree. I think in the office side of things, it's going to be a hybrid approach. There's going to be a flight to quality. So maybe if a business had 3 locations in Kansas City, maybe they consolidate to 2, maybe 1. And where are they going to consolidate? Well, it's the best located, most highly amenitized product that's well parked, typically closer to home. Yeah. And so that's going to present opportunities for folks that see that trend before everybody else does. I mean, if you track retail shopping centers and the capital that's starting to flow into those, I think that the opportunity is already being seen by some of the larger institutional investors looking for yield. So I think the window is there. It's going to be quite small potentially here as well. So you're going to have to move fast. And it always feels weird because you're moving against the crowd, right? I mean, what does Sam Zell say? When everybody's looking left, you got to go right. And it feels hard, and you got to be able to get people to believe in that stuff. And the way that we do that is try to back it up by data and understand that, hey, this is a niche inside of this other larger asset class, and here's why it's compelling. And we've had some success doing that recently.
Yeah, totally. Exactly. Now, on social media, we're and also through some of the private groups that we're in, we're always going back and forth with these economists and stuff like that. So how are you feeling about, kind of looking forward the next 24 months, and just talk to me a little bit about some of the, because you're really smart about a lot of that stuff. So talk to me a little bit about some of the economists you're following, what their take on things are and things like that.
Well, when Jamie Dimon comes out the day of this podcast that we're recording and says, guys, I know a couple months ago or last month, I said there was a storm brewing. That storm is now a hurricane, and we don't know what level of hurricane that is. That really is a telling sign. There was also some interesting things. I read the Morning Brew quite regularly. It's just a morning newsletter. And they said a lot of the venture capitalist funds, Sequoia Capital being one of the largest, comes out and has done a pretty good job calling recessions, and they're doing the same thing. So I'm listening to all of those things, and I'm also, reading a lot of history in regards to what Ray Dalio has to say about the changing world order, where he kind of studied, the rise and fall of all the major dynasties and world powers over the last 500 years. And, kind of found that there was a cycle that they follow, and the big cycle kind of, falls on 3 components. It's big debt and debt monetization, internal conflicts over wealth and value gaps, and then external conflicts. And most importantly, not just a war, but the rise of a great power to challenge the existing great power. And so, I mean, he kind of describes the current paradigm that we're going through in the United States is this. First, the United States is spending a lot more money than it's earning and printing and taxing a lot. And secondly, we have large wealth, value, and political gaps that are leading to great significant internal conflict, which is really concerning to me. And then lastly, potentially being in decline relative to a great emerging power in China. And so all of those things, when smart people are talking about those things, it gets me thinking as well. But then on the flip side, I know Mark and I read Dr. Peter Linneman on a regular basis. He says never to bet against the United States. Yeah. And so I was recently at a CEOs group where ITR Economics, another group that I really follow closely, came and said, look, we are still bullish on the United States economy. And I think a lot of people are getting concerned about the impacts of the geopolitical war that we're, potentially going to get pulled into and that's going on in Ukraine. But at the end of the day, that's a very small part of our, kind of economy. We don't trade all that much with those folks. So that was interesting to hear as well. So I see both sides of it. I think that for me, when those warning signs are being flashed by Dalio and Marx and Dimon and all these folks, I'm going to take heed and I'm going to listen. And then I start to see, anecdotal data when I'm talking to loan brokers and financiers that are really tightening up, and, bridge debt is very expensive as well. And you got to pay $400,000 for an 8 cap on your interest rate. It's just kind of wild to me to see that. So, one of the things that I track on a regular basis because of Dr. Peter Lindemann is, the percentage of new mortgage debt relative to GDP. And that's been at all-time highs recently. We'll see how the second quarter fares to the first quarter, but until that starts to dry up, commercial real estate prices, I think, are going to stay pretty high because I think other people are starting to see that, global equities or public equities, sorry, my mistake there, public equities are, falling in a lot of ways. And that's scaring a lot of people as well. So if I had to pull out the crystal ball, I would say mine is murky as possible. And so what do you do when you don't know what to do? You do what you've always done and stick to your roots that have been successful. So for me, I take Sam Zell's approach and say, okay, well, let's beef up the operations. Let's get our current portfolio operating at max capacity. Let's maybe sell some assets into this market. Let's look at different asset classes. Let's become the best operators that we possibly can. And let's not get our head over our toes and start to get imbalanced in regards to trying to do deals that we don't feel comfortable with. And so making sure that there really is a margin of safety by gauging the intrinsic value of the cash flows on the property and then discounting those into today's dollars is extremely important to do. And that's not happening in a lot of different realms right now. So we've built something here, not a huge thing, but we've built something, and I've spent a lot of time the last 5 or 6 years doing this. I'm not willing to just let it, be wiped away. And so I think that we have the benefit of being in an asset class and an investment type that, serves people, and people need a place to live. They need a place to work. They need a place to shop. So that's a pretty good, thesis. As long as you have good debt that, you're not trying to get too aggressive on. So I think that I have no idea. I mean, all signs point to everybody saying a recession if we're not already in one. What that means to us, I'm not sure. I mean, gas is $4.18 in Kansas City. That's wild.
You're lucky, dude.
Yeah. Well, that starts to really piss off the Midwest if you don't know. I mean, that's
I know it's an all-time high, but in California, it's hitting above $7.
Yeah, that's unbelievable. I'm really concerned. I think 2023 we're going to be okay. I'm really concerned about the election year. I think that I mimic what Dalio says in regards to neither side accepting a victory or a loss. I mean, that's really when democracy is actually at risk is when I get a little bit more concerned and I start growing food and putting guns in my safe downstairs and all of that stuff. I mean, that's things that I've done, in gold bars sitting in a safe and things like that. Like I'm a young guy. You guys tell me. I don't know. I'm just doing what everybody else has said to do during these types of periods of time. This is going to be a new experience for me. So just making sure my health and my family and our business and our personal relationships are all really strong is what we're trying to do. I can't gauge exactly what's going to happen. Yeah. I just know it's going to change, and it's going to change fast.
Yeah. Well, I read Dalio's book too. It's terrific, and I highly recommend it. The thing I would note is that's on major macro perspectives about changing world orders. And, on that book, the U.S., according to Dalio and his 18 metrics, the U.S. has been in a decline since like the mid 70s. We peaked right in like the mid 70s. So it moves slow. Yeah, China's moving up and is most certainly probably going to outtake us in terms of their place in the world order. But I don't think the U.S. is going to crash next year, right?
Right.
I mean, it is a strong economy. It'll continue to be strong. I agree, we're probably in a recession, but it's just important to keep things in perspective.
One thing that we have not turned on and that ITR economics really drove this home for me was the United States is still the number one destination for every other immigrant that wants to come anywhere. Mm-hmm. And as soon as we want to fill all those jobs that people keep talking about that we don't have, we can if we do it in the right way. And so I think that that is that's a confidence builder for me. Yes. I think I saw a stat earlier this week that said something around for every unemployed person, there's 2 job openings out there. And so I think that we do have that going for us as the United States. What really concerns me more than anything is the internal conflict, because this thing bubbles in from the inside out in my mind. And at no level that I've been alive have the sides been so far apart, and it saddens me because I'm a big Christian guy, and I want to be open to everything and hear everybody out, but at the same time, that's not happening, and communication is not happening. And so that's what scares me more than anything, more than maybe some of these, the world reserve currency of the dollar going away. I'm less concerned about that. I mean, I do read about that, and I'm reading Paul Volcker's, book, his memoir right now, because I want to learn about that. But I do think that's some time away from where we're at right now. Right now, it just feels like internally we've got some things that we really have to come together. And if we can hold on and be extremely productive. But that's a big if.
Well, an extension on that too, kind of what you're talking about, especially with, being a destination and immigration, is population growth is critical to maintain that kind of status in a lot of ways.
Yep.
And you have both sides, for one reason or another, wanting to limit that. One side doesn't want immigrants coming in, and really that's a major source of our population growth in many metros, if not the United States right now, because we're just not making as many babies, native born babies as we were. And on the other side, there's people that are really kind of viscerally, existentially against growing the population because they're worried about the world just exploding.
That's right.
You have these two kind of.
That's a misperception, though. There's a population decline. There's so much space in the world for our population to grow and
but somebody brought this up though also, that if I haven't looked at the stats, so I could be completely wrong about this, but talking about China and looking at their trajectory of population growth, if you really believe that it's critical that you have a positive motion in that, they're not projected to be growing any further, and that is a big kind of downside to where they might be heading in a lot of ways.
Sure.
The other thing is comparing their kind of, I guess, per capita contribution to GDP compared to ours, and they may have a lot of people and they've grown, but if you take it on a per capita basis, we far outmatch them in terms of that type of growth. So
ITR mentioned that if we shut our borders 100%, our population growth as the United States would actually be negative. That was one data point that they had. The second thing we have to realize that as soon as anything that happens with Taiwan or economic sanctions happen to China, their industry their economy shuts down. If people stop buying goods from there is nothing else really that's powering that economy. And so there is some power. Would that cause a ton of issues here in the United States? Yes. But I think that there's some people that I know very well that are very confident that the new onshoring and reshoring in the United States, needs to happen, is happening, and trying to break ties from globalization a whole lot more. So like Mark, and like you guys said earlier, it was really all about cyclical nature of this. And so where are we at in that sense? And I think Howard Marks, Dalio do a fantastic job of tracking that. So I just try to second kind of what they're saying and try to understand what they're saying. And then, they're still doing deals. They're still being opportunistic out there, but, maybe a little more conservative in some regards. So just kind of interesting time for us as investors, for sure, to be thinking about all of these different things. And then trying to live in that world as well, right? and thrive too. So, one thing that I always say to myself when I hit the floor every single morning is, God, thank you for letting me wake up this morning, and two, that I live in the United States of America, the greatest country ever. And I will stand by that, and being able to do what I want, when I want, at all times is pretty incredible. And I think that's a huge attraction and something we can't gloss over. So.
Yeah, I love that. Well, man, this has been fantastic. I know that we had a little bit of a rough start. For you folks listening or watching, you didn't see a little bit of our troubles, but we had a little bit of a late start, and that was all my fault. So we finally got it going, and I'm really happy that we finally got you, on the podcast.
Absolutely.
Yeah, this has been terrific, Logan. Thank you so much.
Thank you.
Well, thanks guys for having me.
And we'll talk to you later.
10X for Gen XYZ is hosted by Zach Winter and Mark Adair Rios, co-founders of Prosperity CRE, a commercial real estate investment firm committed to providing its investors with ongoing cash flow and building long-term wealth. If you like the podcast, please give us a positive rating and subscribe to be notified about future content. Also, if you'd like to learn more about our approach to real estate investing, you can download a free copy of our real estate investment book, Investing for Cash Flow and Long-Term Wealth, by clicking the link in the show notes below. Thank you and stay tuned for our upcoming episodes.